You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time, yet again, for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, and I literally am from here today. I'm back in the studio, so it's nice after traveling around to a lot of different conferences hither and yon over the past few weeks and doing a lot of different recordings and episodes at those different conferences. It's nice to be back in the old studios, sounding on my normal mic like I normally sound and everything else. No crazy sirens in the background or birds or all the other fun stuff we had popping off at RMC and FIA and all that other fun stuff. And of course, you want to check out, if you missed last week's episode where we did a deep dive into all things RMC, the easiest place to find that, of course, where you find all your favorite Options Insider programs, theoptionsinsider.com. Right there on the right-hand side of the homepage, made it easier for you to find. Click on Vol Views, and bam, the whole odyssey, 5+ year odyssey of Vol Views is there ready for your downloading pleasure. You can always find it, of course, iTunes, TuneIn, Stitcher. Just type in Volatility Views, iHeartRadio, whatever you like to use to listen to podcasts. We're there too. And of course, you can always join us live every Friday, noon Central, 1 p.m. Eastern via Mixlr. That's Mixlr. I apologize, we have not been live the last couple of weeks or so for a lot of our shows, but we're back now. I'm back now. So the studio's up and running again, so we can do some more live streaming. So for all you guys who are hitting us up, hey, where's the live stream? What's up with the live stream? It's back. And you also get TWIFO today too, so you get a double whammy of live goodness via Mixlr. If you're around and would like to join us, we'd love to see you in there. However you join us, podcast, app, on the website, on the live stream, make sure you hit us up with those questions, those comments. We do love to hear from you guys at the end of the day. You're kind of the reason we do this, so if we don't hear from you, we don't know what the heck you want to talk about. So then we make up crazy stuff, and then Russell and Mark go crazy on their own little tangents, and the show just falls off a cliff. So please send in questions. It helps me keep them focused. Speaking of the aforementioned dynamic duo, let's bring them on too. Let's start off with, I don't know which one's actually closer right now, so I'm just going to go in order on my page here, and it's going to be, let's start off with the Greasy Meatball. I think he might be closer. I'm not sure where he's beaming in from. Mr. Greasy Meatball, Mark Sebastian from Carmen Line Capital by way of OptionPit.com. Mr. Greasy Meatball, welcome to the program, and where are you beaming in from this week?
I'm from our global headquarters in beautiful Chicago, Illinois, home of rain.
Yeah, well, it's better than snow. It has been our one snowy week of the year, pretty much this past week. Of course, when a lot of traveling was going on, so it made it fun. But still, yeah, interesting times out there. Missed you at RMC last week. It was a fun conference. Hope you had a chance yourself to listen to our big rundown that Russell and I did. A lot of interesting stuff popping off. You guys have some questions about that. I think we'll get to that a little bit later. The RMC theme continues to evolve with your questions, your comments, and also joining us last week out there at RMC and is back on this week from parts unknown in the hinterlands of Chicago. We have someday in the near future to be Dr. VIX. Right now, he's the head of education. I think senior analyst over there at CBOE as well, CBOE Bats. Now, Mr. Russell Rhodes. Russell, welcome back to the program to you as well.
Happy to be here. Happy that you apparently didn't have any travel problems going to and from FIA. I know a lot of people had. Well, you got there and you got back.
Yeah, I got there, so that I won the battle by getting there. Yeah, my schedule was actually fairly light. We had a lot of things planned to do and record down at the conference, and one by one, most of them fell out just because no one, even people from Chicago, just could not make it there. You could not get to Florida last week. Couldn't get to the East Coast. It's just this week, I should say. It's a hard direction to go east this week. But c'est la vie. You don't want to hear our travel woes. You want to hear some vol talk. So without further ado, let's get right into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, it's time for the Volatility Review, the portion of the program where we break down the week that was and indeed still is, from volatility trading and trending and development perspectives. Like I said, we are streaming this live and recording it on Friday, the 17th of March, a.k.a. St. Patty's Day here, a.k.a. the national holiday of Chicago, where the whole city shuts down. So, yes, all sorts of fun things going on. Surprised anyone's out there actually trading today, at least here in the hinterlands of Chicago. And it doesn't seem like anyone really is, because most of the markets are pretty much unched on the day today. S&P, Qs, Dow, take your pick. Pretty much unched, or in some cases literally unched on the day. Everyone, again, off celebrating that token Irish holiday that everyone loves to become Irish on that day. And heft a few beverages. VIX Cash, of course, trending to the south a bit as well. Not a ton, though. Hovering right around that oh-so-important 11 handle. We'll see if we can break it later in the show. By the way, I have no one has any dog in the fight this week because we were so busy running down RMC last week that we never had a chance to actually get to our prognostications, our crystal ball. So there is not going to be any winners this week. It's just more of a thought process, more of a little challenge to see how VIX shapes up this week. But it has been an interesting week. Things are popping off. Even though net vol, like I said, VIX Cash kind of shy, hovering around the 11 handle. VVIX also kind of flirting with the low end of its recent range, right around 75. But it doesn't mean things aren't happening out there. You know, we've been in this, kind of, well, except for today, taking a bit of a pause and a few breathers in between. But for the most part, pretty much an endless rally since back in election day. And so people have been wondering for some time, and we talked about it on recent shows, when is the skew going to catch up to that fact? When are we going to start seeing maybe some interest in some of those puts? And some people have been commenting now. We're looking at it now, of course, the CBOE Skew Index getting a little bit rich, a little bit lofty, hitting about 149.5 or so recently this week, which is a near-term high, the high since about late June of last year when it hit about 153.5. And again, there's two moving parts to skew. We'll get into that a little bit. But still, net, an indicator that perhaps times and sentiments, they are changing. Let's kick things off. Mark, you weren't on last week, so we'll start with you. Did you have any thoughts, first off, before we even get to the vol review? Did anything that you heard from us or talking to other people about RMC, did anything resonate with you? Anything interesting or surprising or just maybe dumbfounding? And then what's your take on the week from a vol perspective?
I have to say I was sad that I missed RMC this year. It's always such a great event. It sounded like there were a lot of good different pieces. Nothing that profoundly sticks out, just little tidbits here and there about, how volume and volatility are changing and, what the last kind of few years have been for like in VIX in terms of how it's traded. I think those are kind of interesting. In the week that was, oh my gosh, just vol collapse, more vol collapse, more vol collapse. We had like one day where it looked like we were going to get down. I think we were down as much as 15 this week, and then they bought it right back. It's been impossible for sellers to get anything done, and I'm not exactly sure what the issue is, but nothing will fall, and it's a little shocking, but every little soft patch is met with buying, and maybe that's because there was so much cash on the sidelines. That could be the driver, but I continue to be shocked. The one thing I note is that we've got a 11 VIX now, and the last time VIX was 11, or really it touched into the 10s today. VVIX was significantly higher. VVIX at 73. I mean, that's got to be near a 52-week low for the index.
It's getting there. That 75 range seems to be about like 52-week floor, somewhere in that range.
I'm looking. This is a 52-week low right now. So vol's at not only at a 52-week low, it is touching a 2-year low. The last time vol was this low was in. It touched below the current levels in May of 2015. Did not settle there. The lowest close was 73.18 that we're just above, and that was May 21st, 2015. So we're talking about just incredibly low volatility. And so, when we were talking about the same, a VIX this low a few weeks ago, when VIX got into the 10s in the middle of February, VVIX in the middle of February was much higher. It was in the mid 80s. So you've got this combination of low volatility and low vol. So I'm not sure what is going on there.
Yeah, it is a bit of a maybe a head-scratching, concerning, I guess, depending on which side of the fence you're leaning on, development. It is kind of interesting because I was kind of noticing some of that myself. I was going to ask you about, that notion that, people are saying, oh, vol is low, but realize vol is also low, so maybe there is still some, as we heard oftentimes at risk management, some harvesting of risk premium still to be done out there when there's such a discrepancy between implied and realized. But it sounds like you're saying kind of confirming what I suspected, which is that we haven't really seen that accrete to anything material this week. So it's a tough week for vol sellers. A lot of things popping off. Russell, I know you like to look at a lot of different things as well. First off, before we even get to that, any maybe secondary things about RMC? Anyone hitting you up with any interesting comments or questions or things maybe you forgot to highlight on the show last week that have been sticking in your craw all week? And then what do you think about all the things, Mark's talking about, the premium sellers having a challenge out there, Skew, VVIX, all hitting pretty epic levels, a lot kind of happening in an otherwise quiet market.
Well, the one thing that people always ask me if I can get them presentations that aren't publicly available, and probably the most requested, and then I have to say no, but probably the most requested one was the final session of the final day that had Ilya and Stacy Gilbert teamed up talking about using the Kelly ratio for sizing. I don't know if that was an extension of Ed Thorpe given the keynote speech, and he basically being the father, or at least, no, he didn't come up with it, but he definitely made position sizing based on odds very popular. So that's something that had not been discussed before at the risk managements ever, really, at least position sizing from that standpoint. So that's the one thing that people it seems to be the biggest takeaway, I guess, or the one that everybody seems to be following up with. Mark mentioned that last time we saw VVIX this low was May of 2015. I just want everybody to be aware that by the end of June 2015, VVIX was back up in the 110, 120 range. So don't go to sleep.
I'm with you, Russell. I mean,
I know. I'm not disagreeing with you.
I think that we're completely discounting elections in France right now, which is a little shocking. I do think that one of the major changes is that, unlike 2 years ago, the market is happily accepting what the Fed is trying to accomplish as opposed to fighting the Fed. So that has taken at least 5 to 10 points out of VVIX, because the Fed is now a certainty as opposed to an uncertainty.
Mm-hmm. Yeah, I mean, we don't have any uncertain things coming up until, mid to late April now. So
yeah, unless there's
lollygagging.
Unless there's something we don't know about that's uncertain.
Those are the fun ones.
The infamous unknowns of Donald Rumsfeld fame. Before we move on really quick, I know we've touched on it in the past, but a lot of people have been hitting me up. I do want to talk a little bit about these levels we're seeing out here in Skew. Like I mentioned, it's not quite a 52-week high, but it's fairly close. It hasn't hit these levels around the 150 level back since June of last year. Now, as we said before, Skew is kind of has two working components to it. So the call wing, obviously, and the put wing, and how those move in relation to each other is what gives us this one number. So sometimes it's hard to really digest all that's happening out there from looking at one number. In fact, this was an interesting topic of conversation over at RMC a couple weeks ago. I think it was Manish Deshpande's presentation, who always does interesting stuff, and he was talking about the way we view Skew and how there's this perpetual notion of Skew is driven by buying puts and selling calls, and we have to actually look at it more from the buying power of the calls and how much it drives the Skew. And there's a lot there that I think maybe we have to get Manish on. He can unpack it for us here on the program. But it was an interesting kind of maybe similar but a little bit different view on how we look at Skew. But that said, these numbers are catching people's eyes. I'm always seeing a lot of people hitting us up about it and just commenting in general. I know, Russell, you like to watch all the CBOE indices. Are you feeling that this level of Skew here, hovering around that 150 level, Skew usually flat line or normal C usually I think around somewhere around 125, so around 150 is obviously elevated. Do you think this is Skew finally catching up to what people have been waiting for a while, which is, people, hey, we're getting a little top heavy in this market, we're going to buy some puts, or do you think there's something else afoot here?
I think it's a combination of a couple of things. And the first thing is what we just mentioned with respect to the next known unknown is out there in late April. And the components that feed into Skew are starting to focus more on April than March, like all volatility indexes that are 30-day that have a 30-day time frame. So if you're putting a position on and you're doing so because you're worried about the next known event, you're probably looking at puts out in the April time frame. Now, on the other side of that, Manish, what he was saying with respect to calls and puts and Skew was he was basically saying that the call activity can have as much of an impact as the put activity. And I think with the market making all-time highs, you might see a few more people coming in and selling call options against their portfolio. And that might be having a partial influence as well, or all those things may be coming together to push Skew up to 150. Yeah,
Russell, I agree. And there's also this component of low volatility. One of the things that I don't think gets talked about as much with the Skew index is that when volatility drops, Skew has a natural inclination to steepen. And that is because, the relationship between at the money and puts and calls, if puts are typically trading at, a 3 or 4 point premium to at the money, when at the money vol is 10 as opposed to 15, that really changes how that Skew reads. And likewise on calls, if calls typically trade at a 1 point discount, one, they might trade at a smaller discount, and two, that is going to be as a percentage a lot greater. So when volatility gets lower, if you look at your stocks across the board, almost unilaterally, all of your low volatility stocks will have a steeper skew than your higher volatility stocks. So that is another piece that contributes it. And then again, I agree with you. There is some upside call selling and some downside put buying that are collaring that really are contributing to this. So that's kind of the other piece of the puzzle that I think gets ignored, is that as volatility drops, it's kind of like, think about skew as if you're holding a rope and you're pressing on, and volatility is dropping, you're pressing on the middle of it. Everything drops, but also the curve steepens. Similar to kind of, if you just look at kind of standard deviation, right? Tighter standard deviations look like a tighter cone. And that's part of what I think contributes to skew getting steeper in low vol.
This kind of gets back to what we said many, many times on this show, that all things volatility have a context. They have a frame of reference to them, and you can't just look at them outside of that. You have to really look at it, and skew is no different. You have to look at it in the context of where everything else is trading, and then it gives you probably a little bit a better indication. But yeah, skew is one of those interesting numbers. We probably could spend a whole show dissecting that number and what gets into. I think we have to get Manish on to break down his presentation. I wish he would put that one out for the public, because his has some of the more interesting nuggets and takeaways that a lot of our listeners could look at and maybe make them think a little bit and give them some ideas for future things. Well, again, we'll have to get him on. I'm not sure if he's ever been on, actually. So we'll have to get him on the show to discuss that. Meanwhile, speaking of discussion, if you're into what's cooking right now in all things short-term VIX, well, Russell's got you covered. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, Mr. Russell, now's your time, sir. About 36 minutes I've allotted for you, sir, to really break down all of the deep, in-depth, fun stuff cooking in the world of VIX weekly options. So, sure, what was cooking? What caught your eye this week, sir?
This is I get to say this every 4 weeks or so, or every 5 weeks, depending on where we are in the calendar. This is an awful week for you to do this to me. And the reason I say that is because next week is standard expiration, and you're not seeing a whole lot going on. There was a butterfly that went up that you pointed out to me, using the 17, 21, and 25 calls in the April 26 expiration. And I think that is somebody looking at, again, maybe we should drink, especially because it's St. Patrick's Day, every time we say French election. But I think that's, they're looking at that time frame. I did have a guy that does an awful lot in the VIX options that was expecting a volatility crush after the Fed, and he kind of got that right. And he actually went out and bought some March 29th puts, because he just wanted a little bit more time for the volatility to work its way lower, and didn't. I don't know. His logic was pretty good on that one as well. So I thought that was interesting that he just went a little bit farther out.
What do you think? What do you think of that butterfly, Russell?
I kind of like that idea. It gets you a situation where you can trade around it if we get a spike anytime in April. And typically that's what I think they're going to do with something like this. Bittman used to teach a butterfly strategy where if you rallied up to a certain point, you would flip it around into a bear spread. And that's actually what you could end up with a bear call spread if you do it right, where the worst case scenario is you make some money. And I've always thought about that with respect to VIX, but I don't think I've ever picked up on somebody possibly doing it. Needless to say, it's kind of hard to follow the whole thing. It might not be that hard to follow if we get a volatility spike, since somebody did this with weeklies, but I'd not be the least bit surprised if we get any kind of volatility move to the upside, if they roll it into a bear spread.
Mark, I don't know if you agree with this, but I think this fly, we kind of highlighted in the notes, this one caught my eye as well. I think this has to be, I don't know if it's the worst, but it's probably up there. It's probably one of the worst single trades that we've ever profiled here in the history, the 5+ year history of Volatility View. I can't fathom what this guy is thinking. You know, a 500 lot fly in weekly VIX options, surely you're as offended as I am.
It's kind of hard for me to defend it when I'm the one that executed the trade. So, yeah.
What are you gonna do with it, Mark? Tell us.
I'll tell you what I'm gonna do. I'm gonna do that is, I've got a big short April position in front of it, and I'm basically treating it like a time spread. And my goal is to basically leg out of the April here in the next 2 weeks. Hold that thing through. I looked historically at here, folks. If you want the logic of an actual VIX trader, like Russell and myself, and actually one of the trades that we've actually looked at, you get this right now. You know, my thought process is, if you look historically at kind of events that we've had, like Brexit and the election, typically right around 2 weeks in front of them is when you start to see volatility really move. I like owning it into the election. I'm really hoping for some pulls. And then, yeah, my goal is to flip this around and end up with either a short call spread or some sort of short exposure after I've made money on the entirety of the fly.
We should break it down. Oh, go ahead. I think we should break it down really quickly, Mark. I don't think we broke down the strikes. What were the strikes you did?
I bought the 17, 21, 25. So it was and I bought 500 of them. Paid a little much. I paid like 24, and it's worth about 16, 17 now. But when that opened and April 26 futures were closer to April than May, I viewed that as something that was wrong. So that is why I've executed this trade. I still think the April future is underpriced. So that was another piece of my construction.
Interesting. We've been talking so much about the futures premium out there in these months, which is coming off a little bit now. Still underpriced out there for Mr. Option Pit. Interesting stuff. I think we haven't. I mean, you're trading it aside. It still would have come up on our radar just because we don't see a lot of flies going up, let alone for any size up there in any sort of the weekly contract. So that alone, I think, is worthy of note. Probably interesting too. If this wasn't VIX, you probably wouldn't have turned down a fly. Maybe would have just kept it as a straight up ratio spread. But anything VIX, you got to have that. You got to have that layer to the upside just in case the worst comes to pass. Moving on to the big mothership VIX options. Things there have been a little heavier of late. That ADV, like we mentioned, it was 600,000 for the bulk, at least the first half or so of last year. Then it kind of crept well south of that. Now back up over that 600,000 level, 605, reflecting the fact that it's starting to light up a little bit again out there. This week, also a fairly active week, including, of course, Wednesday, about 1.25 million contracts going up on Wednesday. So another one of those 1M plus days that we haven't seen a lot of out there in VIX land of late, but they're starting to creep back in, which is kind of nice to see. Again, about 546,000 yesterday, and today it looks like a little bit. Actually, a little bit heavier. Some trades have kicked in since we started here. Right about 600,000 contracts going up today, so going to be north of that ADV again today. And the rest of the week, fairly heavy as well. About 2.5 to 1 calls over puts out there, which is about normal for VIX land. Not really heavy, not really light. Kind of just par for the course out there in all things VIX. Looking at the strikes, the hot strikes, the strikes that are lighting it up. Outside of Mark's strikes out there in the weeklies is the March 18th that were taken top billing this week with about 366,000 of those bad boys open, followed by the March 17s. Again, this kind of call strip in March, this near-term, near upside call strip in March is clearly where the action is. The March 17s, 340,000 for the number 2 spot. Number 3, the March 16s, 316,000. So everybody loves their fairly near-term March calls here. Number 4, first put on the list, the March 12s. Again, we talked about that March 12 strike for a while. Those puts are still everyone's favorite put, and they're number 4 on our list this week with just a little bit under 300,000 contracts. Open down number 5, the APE 20s with 280,000, our first APE on the list. Then number 6, some APE puts, a little maybe April, May, 12 put action going on with about 280,000 of the 12 puts out there in April. So that 12 strike is kind of where all the puts are this week. Number 7 getting a little bit loftier with the March 22s, 258,000 contracts, followed by number 8, the March 20s, 252. Number 9, the March 23s, 244,000. And number 10, the APE 25. So getting close, 240,000. Notice the strike I didn't say there, listeners, and the strike we haven't said for some time. I think by shining light on it, we may have indeed killed it on this program, is the 30s. No 30s anywhere to be found, and they haven't been able to be found for at least several months, about a month and a half at least. Out there, probably the last time we talked about any 30 strike anywhere in the top 10. Total about 11.6 million contracts open. That's fairly heavy, about 8.3 on the calls and about 3.3 or so on the puts. I don't know. Do you think we did it, Russell? You think it was us and our deep investigation into all things 30 and probing all of our listeners as to why they trade the 30s and all of our guests? You think that's what finally did it? Or do you think it's just we've been down here for so long that we eventually someone saw sense and they realized maybe let's migrate our catastrophe strike a little bit more reasonable, maybe 25?
25 is the new 30.
Yeah, it is, and there's a lot of 20s too, Russell.
No, I think it's a function of just how low we have been. You know, it's just you feel maybe it's that, maybe it's somebody that's been doing a program for years where they've been buying 30s, and one of our listeners was their client, and they said, "Stop it! They've caught on to you." I don't know. So.
We did see some, I'm seeing the 20s there. I mean, there's one customer that basically, as soon as an option goes offered at 50 cents, he pays 49 for 25 or 50,000 of them, anywhere below the 25 strike. There's a couple of customers that are still doing big 1x2s. Biggest trade of the week I saw was a May 22 call. Guy paid 66 cents tied to 42 tied to 1420, about 71,000 times. Today, paper that we've seen, we had a buyer of the 1415 call spread, and a call stupid buyer that bought the 2021 call stupid for something. Hey, one thing I forgot to say on our previous discussion is, yes, we know that I did a trade, but one thing I think everybody listening, most people get this, but some might not, is that that's just a piece of my total portfolio. If I was only doing one trade, I might do something very different than that particular trade. That trade fit within the constant context of my whole portfolio. So just because I say something and do something and trade a certain way doesn't mean it's a good idea for the listeners to do that. So options have risk. These trades have risk. They shouldn't be done on their own unless you're an expert or with the advice of a financial professional. So, I just want to make sure I cover my own hindquarters that, people need to know that this is not a single trade in a vacuum.
Yes, the other things cooking over there in the land of Carmen Line. Speaking of other things cooking, just getting back to the 30s really quickly. I neglected to mention this last week, but a lot of people come up to me at RMC who are listeners to the program who had their own theories on why that was a hot subject of the conversation with a lot of the listeners. I was approached by many people who had different ideas on why the 30s were the strike du jour and why it's since gone away. So it was kind of interesting. I love hearing all of your various theories. Some of you actually, after listening to the show, told me you went out and actually have been investigating that strike for your own purposes and maybe using it in your own fund or things like that. And then hopefully cooler heads prevailed and you went to 25 or something else like that. But it was great hearing a lot of your theories. A lot of people chiming in with what we thought, that someone on some actuarial table had determined that the 30 strike was that perfect sweet spot between getting too crazy and getting too expensive to pay for some premium. And no, the risk manager wasn't tapping you on the shoulder, so they've been loading up on it, and that just caught wind on the street, and everyone seemed to love it. And now, obviously, calmer, saner heads are prevailing. Saner heads are also prevailing out there in the commodity realm, where if you've been one of these people who've been writing into, let's say, our TWIFO show or even this show saying, hey, what's up with oil vol and other vol? Why is there no love for this? Why is OIV languishing? Well, last week was an interesting week for you, and even earlier this week, we did see OIV finally getting a little bit of lift, a little bit of love, driven by, of course, that pronounced and protracted sell-off out there in all things WTI. If you remember listening, particularly to TWIFO, we said it's going to take some sort of aggressive move in WTI to really kind of move the needle from an OIV perspective, probably and preferably to the downside. That's where the bid was for the premium and the puts, more so than there were in the calls, even though near term those calls have some life as well. And that's exactly what happened. We saw WTI tanking hard and vol actually spiking. OIV spiking up into the mid-30s, so back to what used to be previous, back into 2016, a lot of people thought was the near-term floor for OIV. It spiked up back to that level right around 35 last week. Today, hovering in the 28 level, so back shy of the 30 handle. It's, once this kind of sell-off is kind of maybe petered out a little bit, as expected, you're going to see, that vol start to come in a little bit. Of course, if we get another protracted move, particularly to the downside, I think you're going to see that OIV get a nice little bid again. Other products out there, good old GVZ, not feeling the love. The gold vol about 11, and even TYVIX getting a little light, about 4.3 or so out there. Mark or Russell, anything catching your eye, particularly out there in crude vol land? Is one of the first spikes we've had pretty much since the big OPEC announcement last November. It's been kind of a quiet period for premium and volatility trading out there in crude, but last week and into this week, we actually had some life. You think this is just a one and done, and did this catch your eye and a lot of your readers and listeners this week?
Oil vol being elevated caught my eye. You know what caught my eye on the other end of the spectrum last week was gold vol, which GVZ is all the way down at 11. And it's really interesting. It always seems like when one of them is doing something on the upside, the volatility seems to be coming out of the other one. We've gone from, I'm going to use the regime word, regimes where gold dominates oil and then oil dominates gold. But gold had a heck of a move this week. GLD was up like it's up about 2.5, 3 points from where it was this time last week. So, they underpriced that one. I think you said it right when you were talking about oil volatility. What it really takes, what it seems to take to get OVX or OIV going is for a major support or a major resistance break. And I think that $50, whether it was psychological or an actual line on a chart, that's breaking that is what really got volatility going. Something on my long list of things to do. Sometimes we get these head fakes where resistance or support's broken and then the underlying market comes right back. I wonder if we could use volatility to tell us whether, what the chances are that support becoming resistance or resistance becoming support. What are the odds of that being the case, or what are the odds that we've got some sort of a head fake, like we break 50 in oil? If OIV or OVX didn't really do anything, maybe that was an indication that the market wasn't buying the break of support.
That would have been a very surprising development if we did break through, because we just been what we're talking about in a lot of our TWIFO program. Again, coming up after this show, listeners, so right around 1:30 Central. So if you're going to be hang out in the chat room, join us for that one. We'll get into this in a lot more detail. But we've been seeing how that open interest has been lining up in WTI for some time, and it's been all around that essentially 50 double strangle / risk reversal calls on the upside, puts obviously on the downside. So once you start breaking through those, it would be pretty surprising if they didn't see some sort of commensurate move in volatility, and that's exactly exactly what we did see. Mark, anything on commodity vol before we roll on into the volatility voicemail?
Nothing special. I had been noticing that, gold vol in and of itself had gotten really, really, really cheap. Not entirely surprising. I mean, there's nothing really going on with gold. I think it's, other than the fact that I think it's going to go lower. Gold's weird in that when it much like oil, it takes movement in either direction to make vol move. And the fact that gold has been super range bound, I think points toward very little excitement.
Well, if you're looking for excitement, look no further than our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, and welcome to the Vol voicemail. This is, of course, the portion of the show where you guys take the reins with your questions, your comments, your insights, your poll responses, all sorts of fun stuff. You know how to hit us up, so I'm just going to keep on rolling. You can also hit us up via live if you are indeed amongst the brave out there. All right, let's kick things off with our question of the week, coming to a close, the end of the week here. We asked you guys at the beginning of the week, it's a very Vol-themed question of the week this week. We said, hey, at the time when this question was posted, which I believe was early on Monday, the VIX was around at 11.5, so not that far from where it is now. Snap 30-day vol was about 56. Apple 30-day vol was about 14. And our good old friend OIV was about a 33, a little bit elevated from where it is now. So we asked you guys, if you had to buy, no sell or not sell, no Don S. Maybe we'll get to Don in a little bit. But only buy. If you had to buy volatility, what did you feel was the best value? Was it Snap, a.k.a. the Tween vol? Was it Apple, a.k.a. the iPhone vol? Was it VIX, a.k.a. VIX? Or OIV, a.k.a. the crude VIX? And I've seen the results, so I've been poisoned. So I shan't respond. But maybe, Mark, we'll start with you. What would be your pick? And then what do you think is winning?
What are my options again?
Snap, Apple, VIX, or OIV if you're going to buy vol. Which is your best value, quote unquote?
Apple by far.
Somehow I knew you were going to say Apple. I had a feeling.
Apple vol is at a 12-year low, right? Maybe 15-year low. But my guess is that the general public thinks Apple too.
Interesting. No, I won't say it because I don't want to poison Russell's response, but I will say I was a little surprised by these results. Mr. Soon-to-be someday in the next 10 years, Dr. VIX. What is your pick, and what do you think is winning?
Well, first off, I want to tell Mark why he's wrong.
Cash, right?
No, Buffett.
Oh.
He's going to keep buying weakness on Apple. We saw it in IBM forever.
That doesn't mean that you don't want. That doesn't mean that realized vol can't eclipse.
That's true.
I'm not saying. I think that I'm not saying implied vol is going to pop, but I think from 13 to 14.5 and a move $2 higher is really in the cards.
Okay.
And I love the Buffett trade.
Yeah. Well,
I do agree with you as well.
So yeah, I have this. He did it. I watched what he did to IBM over a 2 or 3 year period, and how the stock acted, because he started working into IBM when I was working on that book. So it's something I always watched, and it really did. It was just like a constant. You could see him come in and buy on weakness because he kept adding to his position. But back to the question. I've always been a big fan of VIX having higher volatility. So I'm going with VIX.
So if both of your answers are VIX, what a surprise!
Dr.
No,
VIX he said
goes
Apple.
with VIX. You're both. So you're picking VIX, and you think the listeners are picking VIX.
Oh yeah.
Okay,
yeah, absolutely. I absolutely think
Dr. VIX going deep down the VIX rabbit hole. Who would have thunk it? And yes, you are correct, sir. With VIX, it was higher. Now it's only 39%. It was well into the high 40%, I think, earlier in the week. So yeah, I got another day or so to vote if you haven't already, listeners, at options over there to make your voices heard on Twitter. 39% for VIX, followed by 24% for OIV, which is surprising because when we posted this, OIV was rich, so that surprised me. Of course, it has come off a bit, so maybe people taking that into account in their picks. Maybe they like this OIV around mid to high 20s level. They think that's cheap, obviously. Followed by number 3, I thought Apple would do a lot better, considering, of course, what we talked about on this program and how Mark was just laying out again that it is in a near-term trough there from a vol perspective. Yet only 19% giving Apple some love, and only 17% wanting to load up on any Snap vol. Which you could argue maybe was a wee bit underpriced getting out of that IPO as well. They priced that at the money straddle, I think, shy of $2, like $1.75 somewhere, and that thing moved almost $2 the first day. So you could maybe argue that they were a little bit underwhelming from their vol predictions coming out of the gate there. So maybe Snap was the smart buy, at least over the past week or so. Let's move on to some of the other questions here. People asking stuff about what we were talking about with RMC. We got Merchant Adventures. I like that. I like that handle. I'm not sure what it means. He's a very adventurous merchant, but either way, I like it. He asked us about what we were talking about at RMC. We talked about one of the presentations where someone said, effectively, the market can only handle a finite amount of short VIX supply, and that we're approaching what they thought on that presentation. I'm blanking on who actually gave the presentation. Maybe Russell will remember. That we're approaching that perhaps saturation point now in the VIX marketplace with all the short VIX interest we're seeing. And Merchant Adventures wants a clarification. They wants to know, not jargon aside, you're just saying lots of people are betting VIX goes lower. Yes, that is exactly what he's talking about. It's a couple of different products. Obviously, net short VIX Futures open interest has been aggressively short for some time. We've also talked many times on this show recently about the puts lighting it up out here in VIX options. So collectively, there have been a lot of wagers on the VIX Futures coming in. We shall see again how that plays out. Mark having a little bit of a different wager this week using the VIX weekly options. Mr. Rhodes, do you remember who what presentation was from?
It came up a couple of times.
It was a guy who was talking long premium aggressively, and I'm blanking on Jamie something, I think.
Oh, I'll dig through the schedule while the other Mark is talking and see if I can remember who that is. But the interesting thing is, if I just feel like if VIX were reaching some sort of short capacity, we would see a lot more anomalies in the markets than we see right now. I mean, I know that we're a little bit steeper on the curve than we've been in the past, but we're not seeing an issue with the market's ability to take down short vol. And the other thing, the other thing is, a lot of people don't think about, and I don't remember him mentioning this, but there's a lot of cross trading between the VIX futures and the over-the-counter markets. And the over-the-counter markets are freaking massive. So, anytime somebody wants to come in and do a trade in VIX futures, just a pure trade being short VIX futures, that can trigger other trades. And there's a big liquidity pool beyond just the VIX futures market. So he's wrong.
Slamming our listeners.
I agree.
No, I'm not being that ugly about it, but I think you've got to think. Same thing with S&P. You got to think spider options, the futures, the SPX, options on the futures. It's the same thing. The problem is with the volatility market, a big portion of the liquidity is not visible to everybody.
Right.
So I think they're overlooking it.
There's a massive variance desks. There are massive variance desks. There are all these crazy, weird things that trade in like Korea and in Tokyo and in London that we don't know about. In France, there's tons of variance. So there's all these other pieces. And then let's not forget about people that are short VIX against some sort of weird long S&P portfolio. They're short. He's kind of right where things can get stretched. I agree with that. But the fact that we're approaching some sort of like event horizon is recalculous.
Yeah, the legion of ways you can accomplish that same goal of shorting volatility out there. There are so many ways. It's kind of hard. Just looking at VIX Futures by itself, maybe you might think we're hitting something near that level. But you're right. There are so many different ways you could do it. The straight up S&P options, the OTC, everything that it's kind of hard. Well, we'd like to see maybe a study in the future, maybe a future presentation at RMC to exactly what that supply, quote unquote, level is out there for some of these strategies, like a short VIX. How much can we reasonably take down, maybe from a Vega notional perspective, before things start getting wonky, to use a technical term? That might be an interesting study. There you go, Dr. VIX. That could be your new thesis. Forget the other stuff you're working on. All right, let's move on. Let's see another RMC related question. This comes from Get Money and Grow. Okay, I'll take it. Not a bad handle. He wants to know. We were talking about last week as well on the show. One of the people are speculating all the time. We do it on this show as well. Why such a huge discrepancy, and why is realized vol so anemic? Shy of 6 for the better part of the last month out there in the S&P. Someone at the RX Management Conference was putting out his reason for it, and he thought realized volatility was so low is because the realized actual correlation between the different sectors out there in the economy had dropped significantly post-U.S. election. And again, a realized correlation, not a topic we talk about a lot here on the show. We do get to it usually with VIX versus SPX, but not much beyond that. But that's an interesting driver. This person writes in to say, hey, there will be a day in the next 60 days that the realized correlation will spike big. He thinks we should have a pool to see who guesses the correct date. And this guy is putting his money in for April 13th. I don't know, 2 days before tax day. Maybe that's the day that that realized correlation is going to return big. I'll have to dig into what's popping off that date, why that one is. But still, interesting. I don't know. You guys want to have a pool for realized correlation spikes? Does that float your boat? Somehow I was guessing no. No. I'm sorry, Mr. or Mrs. Perhaps Get Your Money and Grow. We're not going to have a pool, but I will mark down your April 13th date. I'll have to see. Is that a Fed day or something? I don't think it is. So I don't know why he's so gung-ho for April 13th, but we shall see. I think there is a lot to that realized correlation. That's something of interest and something we can probably explore on future shows. Let's get, here's an interesting one coming from Chris Thomas. Right before the show, I think, actually. He wanted to know, this is a product, I think this one is one of your stable of VIX ETPs, Mark, you like to. We don't talk about it a lot on the show, though, which is SVXY. He wants to know, what are your thoughts on, he doesn't see, a little bit of a typo here, I'll read between the lines here, on getting long SVXY by selling puts. The largest drop in SPXY seems to be about 50%. He says, just for an example, you can get about $1 for $90 puts. That's about 30% out of the money for 30 days. SVXY, if not familiar listeners, is, of course, the short VIX, short-term futures ETF, trading right now right around a 143.5. So his 90 strike is substantially out of the money out there. Like he says, about 30%. So again, it's a bit of a rally-ho mode today, up nearly 3 handles, or about 2%. So, and as you might imagine, the graph for SVXY looked pretty favorable post-election. It's been it's been a decent time to be short vol if you were pretty savvy about it. This thing, again, I also looked at some of his numbers just to see where he was lining up, and he is about right. If you go out about a little bit longer than 30 days, you got to go out to about like the April 28th cycle, and the 90 puts there. That's about 42 days to go. Those are around $1. And you can get those for around $1. So it's an interesting approach, an interesting thought process. Again, we don't break down SPXY a ton here on the show, but we probably should. It's one of those popular VIX ETPs. It does about 23,000 contracts a day. So it's not VVIX, it's not VXX, but it's still pretty active. And this is an interesting approach. This may start getting a little obtuse for some of our listeners. We're talking shorting a put on an already short volatility index, which is, of course, a derivative of derivatives. So some of our listeners' eyes may glaze over at that thought. But it's an interesting approach, and I think his level isn't too atrocious. I don't know. Mark, you like a lot of these VIX ETPs. One, do you sling a lot of SVXY? I'm guessing you like the futures more, but do you touch any of this? And then B, what are your thoughts here around selling some puts, maybe around the 90 handle a month or so out?
I mean, it's the nice thing about SVXY. It's great for your XIV trader that wants to play in the options. Now, the options aren't as thick as you'd hope, but I don't mind that put selling thing. The only thing you're going to have is you don't necessarily want to own. The problem with selling puts is, when you take delivery might be the time that you really don't want to take delivery. So that turns into a little bit of a problem.
That's the thing I was going to point out is I don't think you want to babysit this one a little bit. I don't think you actually. He mentions using it to get long. I would not advocate that use case. Use it, maybe harvest some premium, but things get close. That's probably where maybe you want to consider rolling or adjusting or babysitting. Going back to that fund we were everyone was talking about a few weeks ago with their 1x3s and 1x4 short. You have to babysit that stuff, and this put. Not quite as explosively dangerous as that, but still, there is an element where if you're getting close to those levels, things are obviously popping off, and you probably want to be a little bit quick on the trigger and a little bit aggressive. I don't know, Mr. Rhodes, any thoughts here on using puts to as an entry point for SVXY?
I wouldn't do it like now, but I'm a big advocate of buying SVXY whenever we get a volatility event. Needless to say, it's pretty much worked for the last few, over the last few years. Maybe selling puts when we get some sort of spike down in volatility. That might, or a spike up in volatility, spike down in SVXY. I would, so I half agree with him. How's that?
Yeah, and Russell, generally speaking, when I'm trading, if I want to play just kind of volatility staying where it is, SVXY rallying, I find that like calls or call spreads are usually not properly priced, or I'll do something in UVXY. Now, on the other end, if things are, like you said, if we get a big vol spike, then what happens is SVXY vol explodes. The underlying drops. That can be some times where, selling a put or doing like a put front spread, long one, short two, or something like that can work. What I would suggest to my friend is, some of these out of the money puts are really, really cheap, and SVXY can make a nasty move on a vol spike. So maybe instead of just selling puts, why not do like a put back spread, and sell one at the money where vol's expensive, and buy some cheapy stuff where it's less expensive. And because SVXY tends to have a kind of a weird, kind of an inverted skew, or at least it should in theory, because of kind of the nature of implied volatility. Or no, that's regular. No, some sort of cheapy back spread, something like that, can make some sense.
It is amazing to even just step back for a second and to think, from when we launched VIX Futures and options, it wasn't that long ago, a little over a decade ago, and now to have this entire universe of these ETPs that exist that carve up VIX in just about every flavor under the sun, short-term, short VIX futures and everything else. It is amazing. I don't think anyone, when these things were being cooked up, thought that they would have this level of penetration, let alone this level of retail penetration, into something that is about as, on the surface, as obtuse a concept and as institutionally leaning a product as you would think, and yet retail clearly embracing these things en masse. Interesting question. Good questions. All you got to keep rolling, though. Now it's time for our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball. This is, of course, a portion of the show where we guess recklessly, adventurously, courageously even, on the future. We're like the, merchant adventurers. I like the handle you wrote in before. We're adventurous crystal ball volatility guessers. We have no comparison for last week because, like I said, we were out at RMCs. We didn't get a chance to do a lot of prognosticating. So we're coming out with a clean slate this week, fresh blank picks, and VIX Cash being accommodating, hovering right around that 11 handle out here. So tell you what, I'll make it easier for you two guys. I'll go first, give you time to pontificate. We're hovering right around 11 right now. Again, we're trying to guess where VIX Cash will be exactly this time next week, end of the show next week. And I'm feeling, we flirted with the 10 handle today. I'm feeling a 10 handle again in the near future. I'm going to go 10.65. I got a feeling I may be the southern outpost holder here, but we shall see. Mr. Meatball, I know what you're trading. What are you thinking out here in VIX Cash land for next week?
I will say, you know what? We didn't mention the fact that VIX and VIX Mo are very far apart right now, which leads me to think that VIX is going to head lower. I'm going to go right here, 1090.
Oh, 1090. Interesting. And Mr. Rhodes, our degenerate VIX buyer, let me guess, you're going to be about a 13?
No, you guys are making it easy for me. I'm going to go 1111.
All right, there we go. See, that's what happens when I go first. It makes your life a lot easier. So, yeah, a little tighter range than I anticipated. I thought Dr. VIX and maybe even some people would go a little bit higher, but there we go. All of us hovering right around that 11 handle. We shall see how it comes to pass next week. That, listeners, as though that theme means it's time to come to a close. This epic journey through the world of volatility. What a journey it's been. Talk to SVXY. Of course, I've talked VIX options and futures and weeklies. Who'd be crazy enough to do a fly in the VIX weekly options? Well, of course, the Greasy Meatball. He would do such a thing. Skew, getting up there, worth investigating if you are out there looking at hedging your portfolio. Why exactly you think that is? We gave you our thoughts, but maybe you have some different ones. Write in if you do. If you got different ideas, the VIX futures popping off, VIX options popping off as well. A lot of things to sink our teeth into, including commodity vol, by the way. If you're interested in commodity vol, and you're in the chat room, stay tuned. We'll be back right around 1:30 for TYFO, so don't go anywhere. But before we go, these guys got to go. So let's check in. Let's start off with the Meatball. What's cooking in the land of all things Carmen Line and Option Pit?
Carmen Line, things are great. Super happy. We did a really fun butterfly.
Tell me more. I haven't heard of this.
But at Option Pit, we're launching our new wheel course. You can go to optionpit.com and click on the blog to read all about it. So that would be one thing. Go check it out. Go to our blog and look at our new course.
There you go, optionpit.com. Click on the blogs to learn more. And Mr. Rhodes, your travel is truncated. You didn't get to go to Boca this week, so you had a little bit of a week off there, which I'm sure you appreciated. So what's cooking in the land of all things CBOE? Kind of post-RMC, so you guys probably coming off of that a little bit. But also what's cooking in the land of all things live vol. By the way, I did put the question we got from one of our listeners to some of the live vol guys who were at RMC. I asked them about changing the font settings in cause I remember one of our listeners asked us about that in live vol, and they said they have to work on that. It requires, of course, the whole thing's in Flash right now. It has to be kind of ported maybe to HTML5 before they can do that. So that's going to be a little bit in the future, listeners, but it may come down the road. That said, Mr. Soon-to-be Dr. VIX, what's cooking for you in live vol?
Nothing between me and live vol, but we're doing a class tomorrow on income strategies at the exchange, and then I start an awful lot of traveling on behalf of the exchange. I think I'm in New York like 3 times in the next 2 weeks for different events, and can't think of anything else terribly exciting on the horizon. We did a European RMC kickoff meeting this morning.
Ooh, and where is that going to be?
It's in London, in September 11th through 13th.
I gotta say, your CEO Ed Tilley was leaning on me pretty hard this week to come out to London for the RMC. So let's see, maybe this might be the year that I add the European component of RMC to my travel agenda. By the way, listeners, you want to check out all things live vol? It's datashop.cboe.com to go more. You can get all your bespoke data filled over there. Why don't you click on the Institute tab to read some of Russell's blogs so he can have a job next week, which will always be nice. And on behalf of Mr. Rhodes and the Greasy Meatball and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course for joining us live. We love you guys too, and we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.